How to strategize your real estate purchase around today's higher interest rates. Hi, my name is Nathan King, real estate broker in Fresno, California. Here are a few things to consider and know about with regards to interest rates. There's a lot that goes into the interest rate that any particular buyer is being quoted, such as what is the borrower's credit score? How much money are they going to be putting down as a down payment? Which lender are they using, right? Where's the bond market during the day that they're going to be locking their rate? And of course, what type of loan are they going to be using? Typically, FHA loans, USDA loans, as well as VA loans typically have a little bit lower of an interest rate than you're going to get with a conventional loan, and of course, with a hard money loan. Something to consider. You're marrying the house, if you will, but you're only dating the interest rate. What I mean by that is when interest rates come down in the future, although I'm not expecting that to happen in the next year, eventually we probably will see interest rates climb a little higher, and then they'll eventually, once our inflation is under control, we'll start to see some interest rate reductions. And then that's an opportunity to refinance the house if you plan on staying in that house for at least 5, 10, 15 more years. A common mistake that homeowners have is when they see that they can save $200 a month on their monthly payment because they're getting a lower interest rate. So they quickly go and refinance. However, what they're not considering is that when you refinance, those finance charges get added on top of the loan balance. So if you turn around and you go and sell your house the following year or 2 or 3 years later, you actually haven't brought that mortgage balance down to where it was prior to the refinance. So you're like, oh, well, I was saving $200 a month for, let's say 22 months. Well, then technically you saved $4,400. However, you had added on top of your mortgage balance an extra 12 grand. So you pretty much just lost $7,600 based on not seeing too far in the future. Of course, we don't really know what the future holds, but before you quickly go and refinance, when the interest rates drop, think critically about where are you going to be? What type of house are you going to need within the next 5 years? And if there's a possibility that you might move, don't refinance. Just stay put. So many of the buyers that we're talking to right now are sitting on the sidelines waiting for interest rates to come down. Meanwhile, our inventory is continuing to increase, and there are a ton of opportunities out there for us to be able to negotiate a tremendous deal for our buyers. Finally, sellers are willing to buy down the buyer's interest rates and provide a substantial credit to the buyers, as well as sometimes even negotiate the price down. A lot of times, by the time the seller gets to that place, they've already reduced the price a few times. Now you can lock up the property under contract under their lowest list price and still get a $20,000 credit to help buy down your interest rate so you can make that monthly payment more affordable. So if anybody said that now is not the right time to buy, I would challenge that thought process. It may or may not be the right time for you based on your circumstances, but what I can tell you is if you are thinking about making a move, now is a great time to get a phenomenal deal for you and your family. So if you or someone you know is looking to make a purchase, let's connect so I can assess your situation and get you the best interest rate possible. Take care and God bless.